Hello, ORAT Nation. Today is Wednesday, November 8th. This is a midweek update for everyone interested in the stock market. Mr. Zuber will be out of the country starting, I think it's starting tomorrow for a couple of weeks. So I'll be doing these solo. I'll still try to do one on Sunday, and I'll try to do one on Wednesdays. I'm also going to have a conversation with Taylor on Monday, as Zuber usually does, but he'll be gone. So that, I don't know how that'll go, but it'll be interesting. It's the two stock guys on his channel. So we'll have an interesting conversation, if nothing else. But for today, let's jump into what happened in the market, where we're at. I'll share my screen real quick. I don't think this will take too long today. So here we are. Here's today's status. See if I can make this a little bit bigger. There we go. So if we start with equities over here, the Dow lost a little, S&P and the NASDAQ gained a little. So kind of a split day for the most part today, pretty much sideways movement. Not surprising. I said on Sunday that it's typical that the market, after making a big move like it did last week, that it will consolidate all of those gains for a little while, maybe trade lower or sideways. That's actually healthy for the market, and looks like that's what's happening so far. We'll look at that in more detail. Bonds are interesting though. The yields are down again. We'll look at the 10-year yield in a better view, but look at the bonds right here, TLT. Bonds are starting to take off. I actually had bought some calls a couple of weeks ago, and I just sold those today, made 50% in about 2 weeks. It probably will go higher. And in fact, if the Fed starts cutting next year, this may go much higher next year. So bonds next year, I think, might actually have a pretty good year. Commodities are really interesting. Commodities are slipping, actually falling off a cliff practically. Gold is heading back down. Oil and the gasoline, natural gas are all lower. We're going to look at what that might mean for the CPI report next week. So that should be interesting. And then crypto, of course, Bitcoin is hanging in there, 35,000, just again, kind of moving sideways after a big run up. That's moving sideways, consolidating its gains as well. That's actually, again, healthy. So it might actually continue in the same direction. So we'll see. I think that we are in the process right now of end of year rally. So I think we're going to have a little bit of a sideways or slightly down movement for the next week or so. We'll see what the CPI number does next week. It might actually be the catalyst. So we'll watch that on the 14th. Here are the top movers in the Dow today: Amgen, Microsoft, Apple, JP Morgan. So there's how they looked. Sector summary, interestingly, the number one sector today was real estate. So real estate actually topped, was the outperformer, but we also had technology, materials, industrials. It was kind of a mixture of sectors today, and it kind of indicates the market is sort of in an indecisive spot right now and kind of moving sideways, waiting to see what its next move is going to be, which I think is going to be up. At the bottom is energy. So energy is really getting killed. You can see on that chart right there, and we can actually look at a bigger chart. Energy is actually now below its 200-day moving average and falling rapidly. So that kind of is hand in hand with what oil is doing. So that's what the sectors look like. The top industry groups, mostly aggressive sectors. So we've got discretionary, technology. We've got one financial right here, communication services. And then we get down to home improvement retailers. There's another technology group and another financial. So mostly aggressive sectors here. But software and semiconductors are looking pretty good. Their software really taking off. So ever since really the end of October, software is really moving higher. The semiconductors also looking pretty good. Moving up, consolidating a little bit right here. We've got NVIDIA reporting on the 21st. And as I mentioned on Sunday, NVIDIA typically will move higher into earnings. So it may be doing that right now. We'll take a look at NVIDIA in a minute. And then these are the ones in my best of the best group, some of the stocks that are outperforming today. So let's go take a look at the website. For those who are interested, my website is breakpointtrading.net. You can get the free newsletter right there. No subscription required. You can just click on that every Saturday. That usually comes out around noon or so Eastern time. Also on the homepage, this you can get to without a subscription. Here's the IBD status. Right now, it's still market confirmed uptrend, but it changed down here. Indexes regained 50-day moving averages, raise exposure to 40 to 60%. So let's take a look at the S&P first. I mentioned before that it needed to get above this level right here so that we can make a higher high. And while it did actually close above that today, I would still like to see it get above this trend line right here. So that again is still around 4,400. So it ended today at 43.82, not quite there, but moving in that direction. Again, we may have a sideways movement here or even downward movement slightly, maybe down to the 50-day moving average before it takes off again. But I think this is it's consolidating. Consolidation theory says that whatever the move is previous to the consolidation, it will usually have an equal move after the consolidation. So we had about 250, almost 300, let's call it 300, from 4,100 to 4,400, 300 points there. So another 300 points would put us at 4,700, which is just below the all-time high. So we'll see if we can get there. The S&P, so that's looking pretty good. We still need to break out. So it's kind of like moving sideways a little bit. The NASDAQ looks sort of the same. It has broken out of its trend line, which is nice. Still needs to break above this previous high in particular. So we wanted to see it break above that high to make a higher high. Now, typically what happens and what you want in an uptrend to confirm an uptrend is higher highs and higher lows. So let's not forget that higher lows part of the equation. So if we do get a higher high up here, then I would expect the market to pull back somewhat, pull back down to a support level somewhere. And it may be down here at 13.2. It may be at the 21, which is 13.268, somewhere in this range before heading higher again. If that happens, that's very healthy. Then we would not only have the higher high, but we would also have the higher low, which is a confirmation of an uptrend. So that's what we'll be looking for. Bitcoin right here, again, still moving higher, but consolidating right in through there. The one thing that I don't like too much about, just from a technical standpoint, about the way that looks is technically, if you draw a line across the tops and a line across these bottoms, you get a bearish wedge. So bearish wedge many times will break to the downside out of this. So it's something that we need to watch. I'll leave those in there. And actually those lines that I just drew will remain there. Even if you come back into the homepage and look at Bitcoin again later on, you'll still see those same lines right there. Let me make this a little bit smaller. So there's the bearish wedge. So that is not a bullish sign unless it breaks out of that. But most of the time, these break to the downside. So we'll see what happens here with Bitcoin. You can see the momentum indicator is rolling over a little bit as well up at the top. Not to say that it will, but just from a technical standpoint. The dollar was giving back some, but now it's regaining some momentum. Again, the dollar now is moving sideways. So that's actually good for stocks. Gold is rolling over. You can see that pretty clearly right here. Went up to these basically, I'll call it a triple top right up here. And now it's rolling over and heading lower. We'll get a closer look at the the 10-year treasury. So let's go to charts here. In the charts page, we'll take a look at the VIX first. The VIX again is still, it's below 15. It's at below 14 and a half even. So I drew these arrows right here to show kind of a momentum strategy, if you will. Whenever the VIX, whenever these moving average lines cross and it turns green, that's a time to get back in. So the market's heading higher. Whenever it crosses and turns red, that's usually near the top, and time to get out, move to cash or short. And that's pretty much what's happened right there. So interestingly, the put call ratio is starting to climb again. So what that's saying is a lot of the options traders don't trust this rally. They think that this might start to roll over like it has the last two times and head back lower, even potentially even making a lower low. So they're buying more puts. Now, counterintuitively, that's actually a good thing for a bullish market. So the more puts that they buy, the more likely it is that the market's going to head higher. So that's, I know that doesn't sound too intuitive, but that's a lot of time that's how it works. And then the 50-day moving average right here, you can see it's giving a bullish divergence, got a higher high right there, even as the market made lower lows. And now it too is kind of moving sideways. So let's look at the 10-year treasury. That's just falling off a cliff. It's now actually below its 50-day moving average. There was potentially a head and shoulders pattern setting up here. You can see the left shoulder, the head, the neckline would be right across, right about where the 50-day moving average is, right there. But in order for this to actually be a head and shoulders, it needs to go back up to around 4.8% and make that right shoulder, and then come down and crash through the neckline. So if this just continues to go down, it's not a head and shoulders. It's just the 10-year treasury crashing, basically. So that could be good for stocks, actually. So here's the inverted yield curve. It was heading back to zero, but now it's reversed, heading back down again. If this were to get above zero, that starts the clock for a recession, usually 4 to 6 months, but it's actually heading back down. So we'll keep an eye on that. Let's look at the high-low chart, which I showed last week. High-low chart, again, now it has a few more lows than highs, just barely. As you can see, that's actually turned red right there. So it's a little bit more bearish there as well. So again, this S&P chart, it's right at that trend line, really needs to break through that above 4,400, but it looks like it might be starting to roll over. So we might actually get a retracement here shortly. If we were to get a retracement back down here to around 4,250, then we may have a reverse head and shoulders and an inverse head and shoulders, which would be bullish for it to come down here basically to where the 200-day moving average is, and then turn around and head back higher. That would be an inverse head and shoulders, something else that we'll keep an eye on. That in conjunction with the 10-year treasury would be very interesting if both of those things happen. So we'll keep an eye on that. McClellan oscillators, which gives you a sense for advanced decline lines. Again, it is very bullish. So not only is it above zero, it's above this 30 level, which makes it very bullish right now. So a lot more advancers than there are decliners in the market. So that's very positive, very bullish for the market. Let's take a look at NVIDIA, what I had mentioned before. Look at the chart. You can see NVIDIA is heading up. This is the support line that has been very solid support all the way through here. Came back and touched it and started to head higher. As we head into earnings, which are on the 21st. So what's that? Basically 2 weeks from now, NVIDIA might continue to go higher. So it's outperforming outperforming the S&P and outperforming its own peer group, its own industry group. And its industry is outperforming. That's the semiconductors. Semiconductors are slightly underperforming technology, and semiconductors as an industry is outperforming the S&P and heading back to the highs that it reached back here. So all that looks very positive for NVIDIA and actually for most of the technology stocks and semiconductors in particular. One thing I did want to point out, if we go back and look at the, let me see where my dashboard is again, back here. One of the names down here on my best of the best list, now these are ones that I do every weekend, and I put together this list based on earnings, and the only ones in here have earnings rising. And there's some other criteria, but I pull from the IBD 50, I pull from Tom Bowley's list of strong earnings. So only companies that have beat both earnings and revenues. And I pull from VectorVest, the top 50 in VectorVest, and put all those together and then look at each one to make sure that earnings are rising in every case. And what you see here, these are the top ones for today, top performers. But Celsius Holdings just had earnings, decent earnings. The reaction wasn't great, but if we look at the chart, you can see right here, earnings were right back in here. So they had a nice reaction to earnings, but now it's just kind of moving sideways. But what they also did was announced a split. So they're going to have a 3-for-1 split on the 15th, which is next week. So I think that is going to have a significant impact. That means it's hitting right around $180 right here. So the price is going to drop all the way to 60, but the number of shares, if you hold this, the number of shares will triple. But when this drops down to 60, it's going to hit a lot of people's radar, especially ones that don't know that that stock split is occurring. And it's going to be in the range where people might start buying. Now, typically, historically, strong companies that go through splits like this will normally get back to their previous highs. That's not saying when they will get back to it. It might take some time, but they oftentimes will get back to their previous highs. So Celsius Holdings may eventually get back to 180, but you'll have 3 times the shares. It's not a recommendation to buy it. I'm just pointing this out. It's something that they announced, that 3-for-1 stock split. So what else? Let's take a look at growth versus value to see how we're doing there. And again, this is really starting to take off now. So I mentioned it before that even as the market, both the S&P, the Russell 2000, and the NASDAQ, we're heading lower ever since the beginning of August. Growth, big institutional investors are rotating out of value and into growth. Even as this downtrend was happening, they weren't selling growth. It just kind of went sideways. But right now, growth is significantly outperforming value. And down here is large cap, mid cap, and even small cap now starting to catch back up again. And all of those are significantly outperforming. So that's telling me that the big traders on Wall Street are positioning themselves for this rally to continue into the end of the year, which I think it will as well. So we'll see. What else? We can look at the Keltner channels. This gives us how much oversold or overbought we are. Right now, we're somewhat overbought. So we're in the 2x performance way out here. Usually when it gets to this third level, like it did down here, that is usually a top or a bottom. We're not there yet. So there's still room to move. And actually, if the market does come down, which would actually be healthy, if it came back down to the mean, reversion to the mean, which would be 4,300 in this case, that would be a very healthy move. So again, higher high, then we would want a higher low. And then that's going to set the stage for another higher high, probably somewhere around where these highs are, around 4,500, somewhere in that area. So something to keep an eye on and watch to see what's going to happen. That's about it for today. I think in general, the market looks pretty good. It's performing well as part of the rally, the end of year rally. It does need to, I think, to pull back a little bit just to consolidate some of those gains, and we'll see if that happens. But if it does, it will be a healthy thing. It might be a chance for folks to get in if they weren't able to get in initially. So the other thing, interestingly, up here is the seasonality charts. And if you look at seasonality for semiconductors, for instance, this little icon right over here shows you seasonality for semiconductors in November. 100% of the time they outperform. They outperform the S&P 100% of the time in November. And on average, going back 5 years, their outperformance has been 8% for semiconductors. So you can see that's very positive. We can look at the same thing with software. Software in November only outperforms by 60%, but that's still pretty good. December doesn't look too good for software, though. So this might be the last hurrah for software for a little bit. These all start to outperform again in January. You can see back over here in January. So we'll see what happens with software. And finally here, I do want to show one more thing. This is the S&P. This also includes the vector vest signals for the S&P. You can see that we got a DEW signal, which is the early warning signal for the S&P, or for the vector vest composite. The long arrow denotes the DEW signal, and you can see back here that and the confirmed down were almost at the same place, and we haven't had a new signal until this one right here. But if I go back and look at vector vest and take a look at the graphs, look at the market timing graph. This is the DEW signal from vector vest, and in order to get that up signal, this has to be above that 30-day moving average, which it got above it on November 2nd. And the detrended price oscillator needs to be above 0, which it got above it on the 3rd. So that's when the signal was given. We can turn that signal on over here. So there's the DEW signal right there. We still have an up signal, but look at the line here for the detrended price oscillator. It is right on the 0 line. In fact, today it was 0.11, 0.12, let's call it. If we go back one, it's 0.21. Go back another day, it was only 0.08. So yes, it's above 0, which keeps this a green arrow, but it is just barely above 0. Again, like I said before, the market needs to consolidate these gains. It's moving sideways up here. If this one moves down, actually down back to the 30-day moving average back here, it's going to actually turn, probably the detrended price oscillator will go back below 0, and it will give a red arrow. So we're going to get a very choppy market here the next week or so. So that's something to be very careful of, especially in that consolidation phase. Things can chop quite a bit. Now, one thing I mentioned last week was this new portfolio that I'm putting together, and it's now out of the on the website. Something that I learned from Turner Capital when I was at the Money Show a week ago Sunday. And I'm starting with the total market index, Vanguard's total index, which is a combination of all of these other indexes. So you can see the Dow, the NASDAQ, and the S&P up here. Actually, because of the overlap in these, there's actually 517 stocks in this group. You would think that there would be 630, but there are overlaps between these, so it's actually 517. And then the Russell 2000 is more of the small caps, which you don't find too much overlap between these with the Russell. But the Vanguard encompasses all of them. So the first thing that we do is we want to look at the chart, and I've got these charts out here now. So we want to look at the chart of the total market index, and we can see that back here, it actually turned green with these moving average lines right here, and it is still green. So if you get in the middle of a long-term trend, you can see this turn green back in March. So if you get in the middle of a long-term trend like this, it's okay, but just keep in mind that it could be close to turning back down again. Now it could just continue to run like this, like it did back here. But once we see that the total market is starting to move higher, then we can look at the 2x bullish, 2x bearish ETFs. And the first thing that I like to do is look at the Qs. The Qs also gave a buy signal back here. and it is still green. So that one still has a bullish trend. And if we look closer at a daily chart, you can see where that trend started back here in March. And then we started to chop through here, which the suggestion there was to move to cash. And then over here is where it started back up again, just a couple of weeks, about a week or so ago. But if we look at the QLD on the daily chart, this is the one that you would actually buy to take advantage of this kind of strategy. This one here started back here again in March. It ran all the way up. It was a 53% gain up to this point. This is the cash. This is where it went to cash, because you don't want to hold on to leveraged ETFs if it starts to chop like this. So this was the movement to cash, the signal for cash, and then the signal to get back in right over here. So this is all cash through here. Right now, it still has an up signal. If the market pulls back in through here, that might be a time, you know, if it pulls back and starts to move up again, you don't want to pull back and keep on pulling back. So see where it stops and where it starts to head back higher. That might be the time to get back into the QLD, and then just watch these signals. So just watch the weekly and see if this turns red. And if it does turn red, then it might be time to get into the bearish, 2x bearish, and ride that one the other way. So I just wanted to point out, because I mentioned this last week and I've now included it here on the portfolios page of the website, so folks can track it on their own. I also put a link into Turner Capital, which actually does this same strategy, but they actually invest their clients' money. I am not a money manager or an advisor, so I can't invest your money, but you can follow along with this on here if you want to. And or if you want Turner Capital to do the same thing, they can manage your money for you. I also put a link in here to the Elder Impulse system. If you might have noticed on a lot of these, or on all of these really, the bars that you see here, this is the Elder Impulse system, and it combines both trend and momentum. So trend and momentum, when they're both moving together, the bars are green. When one of those is moving the opposite, and you don't know which one, you don't know if it's momentum or trend, but I mean, right here you can see momentum is waning. But if one of those turns the opposite, then it turns blue. If both of those turn the opposite, it turns red. So a lot of times that's the signal that I will use after seeing the other ones that I just showed you. That is the signal that I will use to get in at the proper time when the other ones are showing that it's a buy signal, or the signal for me to move to cash. Like this one right here is a red bar, which means both momentum and trend are moving down. So just wanted to point that out. I really like these bars because it combines two things in one, and very quickly you can identify those. But this link up here will actually explain all of that and give you training on how that Elder system works. All right, so that's it. So folks who are subscribers to the website, you now can go out here and take a look at this, learn from this, see what these things are doing, follow it along if you'd like, or actually play along if you'd like as well. That all is out there. Once I actually start to accumulate the trades, I will put a portfolio down here and we'll track those over time to see how it's doing. There are very few trades that are done with this system, by the way. So you can even see in this QLD, there's only one buy signal here and one sell signal, and then another buy signal. So in basically a 1 year period, you've really only got three trades in a 1 year period. So very few trades. Anyway, that's it. If you're interested in the website, just go to breakpointtrading.net. The weekly newsletter is right there. And I welcome your participation. And send me any notes or emails if you want to suggest anything or ask me questions. I answer questions to folks all the time. So I love doing that kind of stuff. So just let me know. So that's it for the midweek update. Hope everyone's doing well. I'll talk to you again Sunday. I don't know if I'll do 1 or 2 videos on Sunday, but it will be just me on my own. And then I'll be together with Taylor on Monday, and we'll have an interesting conversation about the stock market and see where it's going. Thanks, everyone. Hope you have a great week. Take care.